it takes a lot to completely depeg a stablecoin, to be fair. So one of the reasons why FTX and UST depegged is because there was so much. Oh god, my memory's fading me at the moment. How did UST? Basically, they were issuing UST out of their arse and putting it into, and they were buying up Bitcoin and FTX, etc. Yeah, that was it, I think. So what FTX were doing is, I think, my memory, please correct me if I'm wrong, because my memory is, one, I never bought FTX back in the day, and so I didn't follow it closely back then, and I forget the aftermath of it all, but I think they were printing UST stablecoin out of its arse. They were then using that UST to buy up FTX, to then prop up the price of FTX. And then when something happened where FTX had a bit of a wobble, it meant that, like, also UST and Luna, all that also had Luna had the wobble, and that spilled over into UST. Now, again, my memory is very fuzzy over that. Now, the issue with a stablecoin depegging now, I think a lot of the risk of that has already gone. So the reason DAI, it doesn't do well, it isn't really doing much, is because it hasn't got much of an ecosystem around it. It's just got some DeFi type stuff. So that's why this has gone flat. BUSD is dead because of Binance. So obviously Binance had that issue where, you know, Binance were getting absolutely slapped by the SEC and stuff like that. So yeah, BUSD died, which again we didn't touch. And so really the only contenders is USDT and USDC. Now there is still a lot of controversy around Tether, and you know, because at one point Finex, which is the company that owns Bitfinex, which is the company that owns that plays around with Tether, they said originally, yeah, we are 1-for-1 backed and it's all in US banks. Well, someone called their bullshit and went, which US banks? And it turns out they didn't have any US banks. Then they were like, oh, yeah, don't worry, we are 1-for-1 fully backed, but they're in US denominated assets and in other offshore banks. We still, to this day, haven't really got down to it. But it seems that as though they've somehow managed to put a plaster over it, and they're like, yeah, everyone move along, and so all is fine. So so this is growing. So in terms of Tether destabilizing from the dollar, I you know, you've got to effectively nuke that. I can't see what would really hammer that unless there was a massive investigation going into Tether. So I think because it's got the biggest market cap, it is the safest coin. Now, in terms of USDC, this is owned by Circle, and Coinbase are all over it. So this is like the official stable coin of the elite. So will this go bust? It's unlikely, because it's like the most government friendly stable coin there is at the moment. But in terms of what Mandy's question of, like, how does it have a wobble, like how does it have a bit of a sell-off, it's people redeeming it technically. So if we look over here now, let's say it goes from this high of 112, let's call it 130, oh no, it's actually 112.992 billion down to 12 billion, 112 billion. So let's just say the best part of $1 billion worth of Tether is basically cashed in. It's people going, hey, I'd like to cash in $1 billion worth of Tether for dollars. So some big boy, big girl, big entity has gone, no, I'm swapping my Tether for US denominated assets, whether it's treasury bonds, treasury bills, or US dollar cash. And so Tether as a company has to fulfill on those remittances. That's basically it. So Tether's, oh god, this is, I think Tether's business model, I'm a bit rusty. I think they've got a very good business model now, whereby they borrow, I think, so what happens is they borrow money to the tune of bonds, let's just say. So I don't know, they're borrowing at, let's say, 0.5%. So they borrow dollars. So this is their US denominated assets of some sort. They take those dollars, they go and buy UST treasury bonds of some sort. Now those bonds are paying out, you know, like 5% at the moment. You know, the Fed funds rate is like 5.33. So they're getting, let's call 5% yield there. Let's call it, you know, let's say the total net yield is, I don't know, 4.5%. So they're getting a yield of 4.5%. They're then taking that yield, that 4.5%, and buying Bitcoin. And they're using the growth, I believe, of the Bitcoin to service the, you know, the 0.5% debt that they're borrowing from. So it's this bit of a sort of loop. Now, some would say that the risk here is, you know, what if Bitcoin goes to zero? Well, if Bitcoin goes to zero, everyone's buggered. So that's not likely to happen. So they're playing it safe by borrowing money and then putting it back into the US bonds, or into the US market, and buying what's typically known as AAA rated assets. So US debt, effectively. And they're making a net yield of, I don't know, 4%, let's call it. And they're just using that yield to buy Bitcoin, which, in my opinion, is safer. And as Bitcoin goes up, they're paying that off. And they're also, yeah. So I think, I could be wrong. It's been a while since I really looked into the inner mechanics of Tether. But that's what it was last time.